Hello. Today we'll be looking at how to do a backdoor Roth conversion inside of the TurboTax software. A few things to know before we talk about how to enter it. The difference between a Roth conversion and a backdoor Roth conversion. These are two separate things. If you did just a regular Roth conversion from a traditional IRA account, this is not going to be the process for that. The difference is when you exceed the income limit to contribute directly to a Roth IRA, that's when you do what's called a backdoor Roth contribution, where you contribute to a traditional IRA and then you do the conversion to a Roth IRA. If you do not have that income restriction, you have no need to do any of this. You would just directly contribute to a Roth IRA. And let's see what that looks like. So if I go to Roth IRA and I say that I contributed, and yes, I did. This is not a repayment. And I contributed $5,000. No, I did not switch or recharacterize any of it. For simplicity's sake, I'm going to say I did not open it before 2024. That's my Roth value. And you can see here, it's telling me I made $218,000. I'm over the current limit of $161,000, which means it's an excess contribution, which means I'm going to be charged a 6% penalty each year on the excess money that remains in the IRA. So this is the reason why you would do this backdoor Roth. So I'm going to unselect the Roth. I'm going to select the traditional, and we're going to go through that. Yes, I did. Let's get rid of that. And yes, I contributed to a traditional. No, it's not a repayment. $5,000. And you can see you can contribute all the way up until the filing deadline and have it count for the previous year. And that does introduce some additional layers of complexity, but not a lot. And you can see my tax bill went down because it's giving me the deduction right now. And this is typically going to be no. This is switched or recharacterized is not the same thing as a conversion. And no, I'm not covered by a retirement plan at work. Any excess contributions? No. Total basis, you're gonna have to find this form to find out what the total basis was. Might just be zero if you did the conversion instantly and you did the total conversion. So yes, make part of my IRA non-deductible. This is what you want to do, because since you're converting it to a Roth anyway, you don't want to take the IRA contribution. It's just muddies the water. This is the way the software wants it. Amount to make non-deductible, the entire amount, my full 5,000. Now you see it removed that deduction for it. There we go. So if I did all of this in one smooth go and I did it in the calendar year of 2024, I should have received a 1099-R for the conversion when I converted it from this traditional to the Roth. So I enter my traditional contribution here. Then I go back to wages and income and I would enter my 1099-R for the conversion. Now, I'm not going to go over that. That's very straightforward. You just enter it, and depending on the code, there's a lot of variation there. So I'm not going to go over that one, but the idea is you contributed to a traditional IRA, you converted it to a Roth. That all typically happens within a day or a very short time period. And then in the software, you have to go to deductions and credits first, enter that IRA contribution, and then go back to wages and income to enter the 1099-R for the conversion. Now, here's the kicker. If you did the contribution in 2025 before the tax deadline and counted it for the previous year, it gave us that option, which is perfectly fine. That means you will not get the 1099-R for the conversion until 2026. And that conversion 1099-R is going to go on your 2025 return, since that's the year that the conversion happened.